Hey everyone, hope they're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go, generally related to three different topics: wealth building, commodities, and or financial topics. So let's just dive in there. Let's take a look and see what people are sharing. If you want to follow me, it's at Finding_Finance. And if you want to join our community, finding-value.com is where I dive deeper into these topics and I talk about individual companies, individual sectors a lot more freely than what I do on the channel here on YouTube. So we've got Yuri here. He says, don't argue with the price, just ride the wave. It is true that the NASDAQ NDX is breaking to new highs. And some people say, well, just ride the wave. I'm in the camp where I'm not necessarily fighting the price trend. I'm just not involved in the NASDAQ or S&P 500, and it's strictly because of valuation metrics. So what I do is I look at the commodity sector that is blowing out to the downside, and that is where I put my money because that's where the margin of safety is, what Warren Buffett would call it, and where the opportunities are at. And it's no surprise that he is buying some oil and gas companies at this time. He's actually a pretty good market timer. To some extent, and that's where he's been putting a lot of his money in Occidental Petroleum. I think he also has Chevron in there that he's purchased the past year or two. But the NDX undoubtedly has been going up. We've got the F oil stocks here. It says the NASDAQ 8 billion%. The TSX is down 18%. And he says, our companies let you make and distribute memes, while the TSX, our companies feed and power the world. While that is true, I will say a lot of that has to deal with the currency. A strong currency like the dollar is going to boost dollar-denominated assets. And if you have a weak or weaker currency, like the Canadian dollar versus the US dollar, people are less likely to invest in that currency and in that stock market because of the currency arbitrage that they're doing. So they're investing in American assets under a stronger American dollar. And that kind of works twofold if you're in other countries with weaker currencies. So you'll see the stronger currency go up and the stronger economy. And they are interconnected. Eric Nuttall says, suddenly in need of some hand-holding with energy stocks. Even though oil has remained strong, need a reminder as to why we are in a multi-year bull market for energy stocks and why we remain bullish. Join me next Thursday at 2 p.m. for why he remains bullish. I also remain bullish in energy. I know we've seen some short-term weakness to the downside in some of our energy equities. But I am looking at this from a longer term perspective. I think oil, the price of crude oil, and where it's positioned on top of its consolidation pattern is bullish, not bearish. But we could still go down in the short term where we get a little bit larger pullback, and it's going to be one heck of a buying opportunity where we're at. I think they're already undervalued. A lot of the energy equities are, and what you're paying for those assets in terms of value per free cash flow, price per cash flow, and all those things, and the multiples. It's all very attractive to me. The Great Marti, it says, warning, study the chart, don't read, won't be long. Won't be long, in his opinion, where the NASDAQ finally starts to roll. You've got the Dow Jones coming back, the Russell 2000 pulling back, and Dow Transports pulling back. And the only thing that's been going up is the NASDAQ. His opinion, he thinks that it won't be long before that rolls over as well. So we'd have stocks starting to roll over. You know when they really roll over? They roll over when the economy is strong, where we get lots of construction jobs and a lot of people getting paid a lot of money in terms of construction workers and services. Inflation is high. The economy is strong. That's when stocks do poor. It's under an expansionary phase of real estate, and that is still occurring and happening. Bob Elliott says, pretty hard to make the case that inflation is clearly beat in an environment where broad-based commodity price measures are at 13-year highs and rising as of late in terms of the CRB index. We've been rising in the CRB index, 13-year highs. This is your big consolidation pattern here. The three-hump consolidation, it ended in 2020. Nice big move up for wave one. And are we going to start wave three here? Wave three is the big wave. We can get a big move for wave three. This would be analogous to 2002, where we had this big third wave, and then a consolidation, then a fifth wave blow off top, and then the big consolidation. So we have a long way to run. We're in the bull market, guys, and we could be starting wave three at some point, or not, if not already in it. Coming down, MAC 10. I know this guy's pretty bearish, so the economy in Y2K was the strongest in 30 years. This is the most debt-bloated economy in U.S. history. Do the math, and this is tech divided by the S&P ratio on a weekly basis. We've got consumer confidence dropping. We've got the March 2000 dot-com bubble, and we have surpassed that bubble, which is the AI bubble. So we are in a bubble. I do agree with that based off of valuations. And we are up in nosebleed territories. And then the question is, well, when is this thing going to reverse and go lower? And that's where a lot of people say, bubbles can last longer than what you think, and they can go to valuation levels much greater than what you can imagine. And I'm not saying that we're there yet, but it seems like that is the avenue that we are pursuing. Investment wisdom, a quote here. It says, we never look at any analyst reports. If I read one, it was because the funny papers weren't available. It says Warren Buffett. Somebody asked me about analyst reports. I think it was like a Q&A session ago, or maybe two. And I don't look at them. I don't. I used to when I was a new investor. I would look at them, but I found them completely worthless. A complete waste of time. And I would not waste my time on these analyst reports. And I saw this quote come out. He says, we never look at analyst reports. If I read one, it was because funny papers weren't available. So, yeah, it looks like Warren Buffett, or I agree with Warren Buffett, or Warren Buffett agrees with me. He probably adopted that strategy before I did. So, yeah, I don't follow those things at all. There's zero worth in them. And that's why they're not included in the three pillars: technical analysis, ratios, and market cycles or market conditions. Game of Trade says, this is unbelievable. NVIDIA recently hit a $3 trillion market cap with only 29,600 employees. That's 102 million market cap per employee. The second in line is Apple, which is less than 1/5 of NVIDIA. And this is market cap per employee, 102 million. That is crazy, though, to think about. Absolutely crazy how overvalued that is. Brandon Bello says, commodity investing in a nutshell, says, Dad, what was it like making life-changing money from NVIDIA and Apple during the AI boom? He says, I didn't. I spent my time and money on metals and mining stocks. And of course, the kid's saying he's a legend. I hate to say it, but from 2020 bottom, there's a lot of stocks that have outperformed Apple and NVIDIA. From the bottom of 2020, if you were to cherry pick those companies, just like you're cherry picking NVIDIA and Apple, though. So if you were to put strongest against strongest, Apple and NVIDIA has not outperformed some of the 100 baggers off the bottom in commodity stocks from the bottom there in 2020 till today. So they've returned over 100 times their money in less than 4 years. The Great Martian says, and so it begins. Wow, breaking. Swiss bank Flowbank goes bankrupt. So Flowbank goes bankrupt, and is this a beginning of bankruptcies in some of the in some of the banks? Is this going to be what we're seeing in a 50-year chart breakout for silver and potentially gold? Is this going to cause panic? Are we going to see money start to shift from the banks into precious metals or something different? I don't know. but maybe it is the beginning. And I'm positioned for it already, so it doesn't really matter, to me at least. Brandon says South African assets seem extraordinarily mispriced. And I says tomorrow's a better country. With the DA at the heart of the new multi-party government, South Africa is ready to write a hopeful new chapter that defies the odds once again. Let's unite to rescue South Africa. Sounds like there's a lot of things going on that are good in the country coming up for South Africa. The Great Marquis, S&P 500, 3 words, even though it's 2 words. Buckle up. Could this be a cup, a handle, a rising wedge, and a potential break to the downside is what he's got. I know he's pretty bearish. He posts a lot of bearish charts. I'm bearish on the S&P, but I'm not brave enough to post these charts to call a top, at least not yet. I'm just riding in the commodity space where the valuations are fantastic. And I don't like looking at these big rising wedges. And we'll see if it's a rising wedge. And we get a breakdown. John Wake says, home prices kept falling for 3 years after rates started falling in 2009. That is correct. Rates and home prices fall together. That's when you know you're in a hypersupply phase. If we were to lower rates today, home prices would balloon higher. That is when you know you're not in a hypersupply phase. So a lot of the people who think we're in this big bubble, I would argue if you were to lower rates, would home prices go up or would they go down? In my opinion, home prices would go up if you lowered rates today. Historically, you go into a hypersupply phase and home prices and rates go down together. They go down together. That's when you know you're at the end. And they usually stay depressed for a little while because the supply demand, you've got too much supply to the demand that is out there. Mike Simon says, this is a great visualization. Question to think about. If America home ownership rate in the last 2 decades is falling, is that actually evidence that our policies and financial markets are failures? We don't know what the world would have looked like without the falling rates. Where is that? Is actually evidence. So we don't know what the world would look like without them. We could, for example, be in a dramatically worse conditions now, right? And this is home ownership rate and how low it is going into the 2010s versus the 40s and 50s. Coming down, 10-year U.S. Treasury market is in a secular bear market since February of 2022. Cyclical bull market could see 10-year yield U.S. Treasuries mean revert to the 3.28% area, the 100 quarter moving average over the next 6 to 12 months. And that would be a projection of a slowdown if we saw that pull back to the 3.218 area down here. So it pulls on back and then we go higher again. So I have seen a lot of calls for a slowdown and a lowering of yields. I think that will reaccelerate the housing market. And then I also think that they're going to raise rates after that when the housing market goes up, the home prices. So that is a likely outcome for that to do. And what you'd see then, if we get lowering rates, we would see precious metals go up. That's going to be the counter kind of move to what we had in 2021. You could see a softening in energy prices, which we're seeing right now, and that could continue. And then when we lower rates, that will be that's generally when we could see a steeper move to the downside, which is potential. And then when they lower rates, then it would all ignite it again at some point, and we start to recover. We start the expansion phase of real estate again with greater intensity. But we'll see if that comes. That's not in the bag yet. A lot of people are predicting that, and it hasn't come to fruition yet. Gold Ventures says, I declare the bottom today. No trolling, just declaring. And this is Gary Savage. I warned there would be no sustainable move after blah, 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 blah. All right, guys, screw the short term. Ride the long term. These guys are just arguing against each other nonstop about calling the market correctly. I don't see the point in it. I'm in this thing. I accumulate when on pullbacks, hold the rips, accumulate on pullbacks, hold the rips. Let's just keep going over and over like that. Brandon says, I've seen a lot of fear and trembling about the recent silver price action. Just breathe, people. Silver just broke out of a 4-year base. It's now pulling back to support our prior resistance. And that's that 28-ish dollar level that I've talked about. There's nothing wrong with this price action so far. And it's silver. And there's the breakout. We break out. We usually get a retest move around the 28-ish dollar level. And then we'll work our way on up. I mean, guys, just be patient here. Calm down and let it rip. Art Berman says, physics ignorant bullcrap from David Fickling. Civilization runs on power, not capacity. Solar accounted for 0.8% of world power usage in 2022. Race car 60 miles per hour in 4 seconds with power at less than max efficiency, 50%, not wasted energy. Wasted energy only exists in propaganda, not physics. So a lot of these guys, they talk about solar capacity, but we don't actually ever use the capacity. It's not generating power. So power is what we want. Capacity does not matter. And that's the problem with a lot of these solar panels and even wind. How much capacity do you need to install to get a predictable power output? Do you need to put in 10 times the capacity to have a steady load of power that is required? That's the question. So a lot of these guys, they talk about capacity. Capacity is just a bunch of crap. I agree. And why I am sharing it. Banking crisis, the Great Marty, it says it's worsening. Another 100 million to the rescue. From 0 to 100 million in bailouts every couple of weeks. Soon, this will be in the billions. It won't be long. And this is the overnight repurchase agreements Treasury secretaries purchased by the Federal Reserve in the temporary open market conditions. And we're spiking this overnight all the time now. Like, what is going on here? Is this what's going to send silver up to the moon? It's already broken its 50-year cup and handle pattern. This could be one of those things that we couldn't predict, but when it comes, we could see it when it would finally come. So maybe this is it. Maybe this is where they got to print a whole bunch of money because in my opinion, it's going to come from money printing. It's also why maybe we're seeing weakness in some other sectors like oil. They're going to print a bunch of money. We send gold and silver to the moon, and then oil follows behind it. That's my guess. Investment wisdom. The 5 most dangerous words in business are everybody else is doing it. Warren Buffett. Z4 Energy. We would expect to see crude storage withdrawal next week. A sustained throughput near 17 million barrels per day, and big reversal lower in net imports. From here, we would expect crude stock reductions for the next 3 months. So crude stock reductions are going to equal higher prices. That's not what we've seen in the equities, though. XOP has been going down. OIH, which is energy services, have been coming back down. Or are they trying to scare people out, steal their shares before the next leg higher? That is the question. They're not stealing my shares. I'm holding on, but this is where we're at. And he expects crude storage withdrawals coming up here for the next 3 months. Investment wisdom. Stock picking is both an art and a science. Too much of either of those is a dangerous thing. And I agree. It is kind of an art and it is a science to some degree. It's official. Silver shortages next. We discussed this during yesterday's webinar. The CEO of the largest silver miner. This is what they say. There will soon be very little inventory left, says the Swiss mining executive with more than 25 years of experience in the sector. Consequently, any uptick in investment demand coupled with ongoing industrial usage could create a particularly bullish scenario. Well, that's the silver market, guys. That's what their opinions are. Insiders. South African media is reporting the ANC and the DA have signed a co-governance agreement. This is the dream outcome for South African equities, in Calvin's opinion. And I do own a good chunk of South African equities. I do. URNM divided by the Sprott Physical Uranium Trust on the logarithmic scale. Still solid breakout, guys. No major higher highs yet, though. So we've got a breakout of the downtrend line, and we're looking for a breakout of the higher highs. That's what's coming next. Streams have crossed. Nat gas supply 2024. We continue to go down in supply. You can see the change over 2023 and how we've really pulled back on the supply of natural gas. And this is our supply overlooking 22 and 23. We are coming back down for natural gas supply. We have really cut back. And that's what I've got for today, guys. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you're interested in joining. We do have that question and answer session coming up at 5 p.m. on Sunday. Mountain Time, if you're interested, I'll answer whatever questions you've got, give you my opinions on it, and individual companies, if that's what you're interested in asking about. And that's all I've got for today, guys. So we'll catch you later. This is Finding Value.